Hey everyone, John Henry here, slingshotfutures.com. Welcome back. I hope everyone had a fantastic weekend. I hope everyone was able to spend some time with their friends and family and all that fun stuff. Now, as we come back, we're met with some really cool stuff, okay? We're met with the launch of the micro index futures. Now, the micro index futures, if you didn't see the rumblings on Twitter and Facebook and the CME website and all this other stuff, essentially what the micro index futures are a 1/10 variation or a subderivative of the full index markets. So we're talking about the S&P 500, the Dow futures, the NASDAQ futures, the Russell futures. These are 1/10 the size. Now, what makes this so awesome and what brings to light so much potential here is the fact that they are 1/10, right? One of the biggest issues, especially if you're the type of trader who likes building into positions or holding long-term positions, etc., when you're doing that on futures, you're using a lot of leverage and you're exposing yourself to a lot of risk. Let's take the S&P 500 for an example. The S&P 500 ticks at $12.50 a tick. Each point is $50. Everybody who's traded the S&P 500 is familiar with this. But the problem with that is if I wanted to hold a position overnight or for the course of a week, or maybe something big is going on and I want to hold it overnight, etc., when you're looking at the overnight margins, and that's the cost that it's going to basically, it doesn't take it out of your account, but the margin cost that it holding from, well, it's not, when it says overnight, it's a little bit weird, but when it's holding overnight, it's holding from 4:15, or, well, actually 5:30 until 6 p.m. So that little 45-minute window, right, that little window between 5:15 and 6 p.m., that's overnight margin. That's considered holding it overnight, even though it opens again at 6 p.m. But the requirement in your account can be substantial, right? I mean, on the S&P, especially when high volatility times hit, brokers increase margins. So you're looking at like $6,000, $7,000 to hold one contract overnight. And if you like building into positions and you're holding 5, 10, 15, 20 contracts overnight, you're forking over a huge amount of money just to stay in the position. And that can be a really big problem. Now, along with that, we also have the fact that, well, at $12.50 a tick, it's heavily leveraged, right? So a heavily leveraged instrument that costs a ton of money to hold overnight, although that money doesn't leave your account, but it's a margin requirement, that adds up to be kind of a problem, especially for newer traders who maybe don't have a $20,000 account to come in and trade with. They're coming in with $1,000, $2,000, $5,000. They can't even hold one contract overnight, let alone more than that. And at $12.50 a tick, what if something happens at 9 o'clock at night, President Trump says something the wrong way and the markets go tanking, cough, cough, the last 2 days talking about tariffs. You come in and you wake up to this monstrous drawdown if you didn't utilize your stop correctly, or maybe you accidentally used the stop limit and it skipped your stop and you never got taken out. We've heard horror stories about that happening in the past. Those are the types of things that you have to deal with when you're looking at the futures markets being so heavily leveraged. Now comes in the era of micro futures on the index markets. And this is really cool, you guys. This is something that is allowing basically every trader to come in and get some skin in the game. You're able to come in with a massively reduced margin cost, even overnight cost. You're coming into a massively reduced tick cost. You're coming into these huge reductions in overhead. The commission costs are really low. Everything is picture perfect, especially if you're a smaller trader who maybe wants to get in or maybe you want to build into positions. But you can't do that at $12.50 a tick on the S&P because it just costs too much. The open risk is far too high. So what are the micros, right? Let's break them down. The micros are a subdivided 1/10 contract. Now, what that means is if you look at the overall S&P 500, the /ES, right? The ES is $500 margin intraday, usually. It depends on your broker. But you have a $500 intraday margin and it ticks at $12.50 per tick, or that equates to $50 per point. Now, the problem is if we break this down and look at overnight margin, now we're looking at anywhere between 6K and 7K overnight margin, right? That's the overnight margin just to hold it for longer than that day. which if you're a longer term trader, you're playing off some of these massively volatile swings, that's a lot, especially if some traders might not even be able to afford that depending on the size of their account. So that's the S&P, right? Now, what's the micro ES? Now, the micro ES is MES. Now, the micro MES, the micro S&P, ticks at, guess what? 1/10, right? $5 per tick. In this case, we'll just keep it equidistant. So it's $50 intraday margin, right? $50 intraday margin. It's $1.25 per tick. That means that it is $5 per point. The overnight margin is 600 to 700, right? That's the difference that we're looking at. Now, yeah, $1.25 a tick, you're not going to be paying the mortgage with that if that's something you're trying to do. But what this allows you to do is get some skin in the game without the emotional fear or impact that can sometimes happen when you're talking about bigger contracts like the S&P. Or maybe you just don't want $12.50 a tick. Maybe you want a little bit more flexibility. There's so many different variables that we can do now with these micro contracts that it's almost pushed the standard contracts, the S&P or the Dow futures, the full-size Dow futures, it's almost pushed those into obsolescence. The only way that somebody would continue to trade the S&P, in my mind, is if they're trading 100, 200, 300 contracts, because, well, at that point, you already have the flexibility. Dividing that or timesing that by 10 is not going to do much. But for most traders trading 1 to 10 contracts, which most people do when we're talking about the S&P or the Dow or the NASDAQ or any of those, well, realistically, this is adding a huge amount of flexibility, because now for every 1 contract that you trade on the S&P, you get 10 of the micros. Now, that may not seem like that big of a deal, but now we're talking flexibility. Whereas before with the S&P, if I wanted to buy in a pullback and, let it go up, I can't scale out of a partial. I don't have a choice. It's all in, all out, and that's all I can do. But now with the micro contracts, instead of buying 1 E-mini S&P, I can buy 10 E-micro S&Ps for the exact same cost, and I have 10 times more flexibility. Let's say it goes up a point and I want to scalp out of a point or 2. Now I can scalp out of a point or 2 with 7 contracts and leave 3 to run. And then it goes up another 2 points and I can scalp out of 2 more, and then I can leave 1 to run, and maybe I can hold that for the next week. You can't do that with the standard S&P E-minis because you don't have that flexibility with 1 contract. It's all in, all out, period. That's it. You can't split them up and chop them up like you could with like Forex or CFDs or something. So this is bringing to the table a completely new era, a new generation of trading when we're talking about the index futures. And man, is it exciting. I'm super pumped about this. The last couple days in the room, we've been trading these and we've been having an absolute blast, a phenomenal learning experience, and just overall a fantastic, I can't really say anything bad about it. It's a fantastic advantage. One of the big concerns when you're looking at micro contracts is liquidity, right? When we're looking at like the micro crude oil, right? The mini crude oil, the QM, for those of you who are familiar with it. The problem is not that it moves or doesn't move. The problem is liquidity. I can't go in with 10 contracts and expect to not get slipped. Part of it. It's just part of it. I'm going to get slipped if I'm trading in that environment. In this case, the liquidity has been phenomenal. The volume has been awesome. There's way more than enough volume at each price point, and granted, the last few days have been very volatile. But if this volume keeps up, I just don't see a reason why anybody should trade the full-size E-minis anymore. The only way that someone would still trade the standard E-minis is if your commissions are way out of whack on the micros. And I have heard some people saying that, especially about Thinkorswim. Here's looking at you, Thinkorswim. Your commissions are garbage, okay? A lot of what people have been saying when it comes to Thinkorswim and the commissions is it's going to take 11 ticks of the micros just to overcome the commission cost. Whereas if you look at something like NinjaTrader or AMP Futures or any of the big futures brokerages, the commission cost is 1 tick and you overcome it, maybe 2, right? That's what needs to happen if these are going to take off. And Thinkorswim, from what I've heard, they've dropped the ball completely when it comes to the commission costs. But some of the other ones have the commissions in line. So here we have a breakdown of what we can see, the micro multipliers. We already kind of talked about them. But if we're looking at the Dow as an example, the Dow ticks at $5 a tick on the full-size /YM. That means that every tick on the Dow is 50 cents. right? What an awesome way for a new trader to come in and work on the emotional aspect of having real money on the table, right? It's easy to trade on sim, no problem, because there's no impact. But the problem is when you move to a live environment, you get slaughtered because you're not used to the emotional toll that that can have on you. Well, now we have micro futures where you can still get some skin in the game. It's not much. It's only 50 cents a point in the case of the Dow, but it's still real money, and that's enough to get that emotional factor in there. What a phenomenal way to practice while still using real money, right? You're building your emotional... You're building the emotional side of things, your armor, right? You're shielding, but you're also really trading, right? You're not just trading fake money on a sim account, you're trading real money on a live account at reduced risk so you don't have problems sleeping at night or having a chance of blowing your account out because something happened in the markets. It's a non-issue now. Now we have the micro Dow, which is 50 cents a tick, that you can jump in on. And sure, there's a huge amount of movement going on right now. We've seen 200, 300 point moves on the Dow in 15 minutes over the past couple days. But divided by 10, right, at 50 cents a piece, you're only looking at like a $100 move to hold for a full day. I mean, that's incredible potential that we're seeing now in these markets. It's an absolute phenomenal move that I'm seeing from the CME group on this, and I can't be happier. I'm so pumped about these micro futures. So the door that it opens up and the potential that it opens up is what I'm so excited about. Because if we look at the micro futures contracts, they're ticking the exact same. If you look at the S&P contract compared to some of the other ones, here we have the S&P is ticking at 2879 roughly. When I open this up, it might be a little bit different. But here we can see, right? This is the MES, 2878 and 3/4. It's to the tick. I mean, it's perfect. And if we look at the actual dome of what we're seeing, there is a ton of volume here. There's no fear of getting slipped here. If I want to trade 5 full-size contracts, that's 50 contracts. 50 contracts on the micro is not going to stand out. There's 400 on the next ask or the next bid. That's awesome, right? You can get in with full-size contract size on the micro contract, offering you up a huge amount of flexibility. Now you can partial out of trades. Instead of having to go huge size on the index markets, you can do it on the micros. It's such a huge benefit. It's ridiculous. I'm so pumped. If you couldn't tell, I'm so excited about these micro contracts because the door that it opens, especially for a lot of new traders, smaller accounts, maybe you want to swing trade but couldn't afford it before, here's your chance. Right? This is a phenomenal opportunity when we're coming into the futures markets with the micros. And man, what an awesome move from the CME group pushing this stuff forward because this is phenomenal. The door that this opens up for new traders, big traders, small traders alike, you can't beat it. And over the past couple days that we've been trading in the live trade room, I couldn't be happier. Here you can see some of the trades that we took on a little bit earlier, right? We had a nice little trade on the NASDAQ, fading the highs, beautiful move down. We took 2 contracts, right? 2 contracts on the short there, and utilizing a small account or a small account challenge or what a normal trader would consider a smaller account of even $2,000, your maximum margin that you had to maintain that position was $100. It was $1 a tick. That is phenomenal. I mean, you can hang on to it for a lot longer. You can try to hang on to it for a smaller amount. You can still scalp them if your commission rates are good enough. Maybe not on Thinkorswim. But, I mean, the door that this opens up is absolutely incredible. And I know I've said that a million times, but I'm so excited about this. And I really just wanted to spend a little bit of time to cover the potential that we're looking at here, because this is awesome, right? The micro contracts are a new generation, a new wave, a new door that's opening up in the index futures that you didn't have before. And some of you smaller account traders or traders that want to swing trade, or maybe you like building into positions, now you have the opportunity to do it. Right? You don't have to go in with 10 full contract size on the S&P risking $125 a tick. You can go in 10 contracts on the micro, only risking $12.50 a tick. It just, man, oh man, am I excited about this. And I hope you guys are too, because the potential here is through the roof. So I just wanted to take a little bit of time to kind of cover what the micros were, what they are, how they operate, how they function, and just kind of get a feel for it. Looking at the commission rate over the past couple of days that we've seen a few of the members posting and what we've seen in terms of commission rates, we're looking at 41 cents a contract. If you're trading the Dow is 50 cents a contract. So it's still one tick and you're able to get in the green. That's perfect. Now, double check with your broker. Your broker may have different margin rates, might have different commission rates, and that will play a huge role in the potential that we have here. But looking at some of the more popular ones like AMP Futures or Global Futures or NinjaTrader or some of the other big names, the commission rates are far enough down where it just doesn't make sense anymore, to me at least, to trade the full size ones. These have so much more opportunity in them. So just wanted to cover the micros for you, kind of give you a feel for what they are, what they do, how they work, and all that fun stuff. And man, oh man, these are going to be a mainstay in my trading, that is for sure. I love these micro contracts and the flexibility they bring. And the members that we've been having trading on these past couple days with the micros have been having an absolute blast with them. Awesome, awesome, awesome stuff coming out of the CME group. I couldn't be happier. That's going to do it for this one. Hopefully it fills in the blanks of what are the micro contracts? What's going on? How do these work? That's what they are. That's how they operate. They work tick for tick with the bigger contracts, but they're 1/10 of the cost, meaning that if you wanted to trade one contract of the S&P, you could trade 10 micros and it would be the exact same thing, but you would have 10 times more flexibility. I just don't see a downside to that. That's going to do it for this one. As always, if you have any questions about it, feel free to shoot me an email, jbrink@slingshotfutures.com. Of course, as always, if there's anything that stood out or anything that you find interesting or you want to talk about, throw it in the comments. We'll have a discussion down there as well. But that's going to do it for this one. I really hope that you find these interesting. These micro contracts are definitely going to be a mainstay for my trading and our trading at Slingshot Futures. And I know a lot of members have been super, super pumped about them already. I had to make a video about these because, man, we are excited. That's going to do it for this one. Like I said, the potential is there. You just got to be able to reach out and grab it. Man alive, they're making it really easy. I hope you had a great day of trading. I hope you had a fantastic weekend. I hope you had a great, just overall coming back into this awesome new opportunity that we have in front of us. And until the next video, we'll see you on the next one. Thanks. Have a good one. We'll talk to you all later.